Have you ever wondered what stocks, shares, and equity really mean? You hear about them all the time on the news, but what exactly are they? And how do they work? Don't worry, I've got you covered. In this video, I'll break it all down for you in simple, easy to understand terms. By the end, you'll know exactly what these terms mean and how they're connected. Let's start with stocks. Think of a stock as a tiny piece of a company. Imagine a company is like a big pie. When you buy a stock, you're essentially buying a slice of that pie. It means you own a small part of the company. For example, if a company has 1,000 stocks and you buy one, you now own 1/1000th of that company. This makes you a part owner, or what we call a shareholder. Now, what about shares? Shares are just units of ownership in a company. They represent the pieces of the pie we talked about earlier. So, when someone says they own 10 shares of a company, they're saying they own 10 little pieces of that company. The value of each share can go up or down, depending on how the company is doing. If the company is successful and making profits, the share price often goes up. But if the company isn't doing well, the price might go down. Okay, so where does equity fit into all this? Equity is just a fancy word for ownership. When you own shares in a company, you have equity in that company. It's your claim on the company's assets and profits. For example, if a company makes money, they might share some of those profits with shareholders in the form of dividends. As a shareholder, that's your share of the company's earnings. The more shares you own, the bigger your slice of the profits. But why do companies sell stocks in the first place? The main reason is to raise money. Imagine a company wants to grow. They might need money to build a new factory, develop new products, or expand to new markets. Instead of borrowing money, they can sell stocks to investors. In return, those investors become part owners of the company. It's a win-win. The company gets the money they need, and investors get the chance to share in the company's success. So, let's recap. Stocks are pieces of a company that you can buy. Shares are the individual units of ownership, and equity is the overall value of your ownership in the company. It's really that simple. When you invest in stocks, you're not just buying a piece of paper or numbers on a screen. You're becoming a part owner of a company. Pretty cool, right? If you found this video helpful, don't forget to like, share, and subscribe. And if you have any questions about stocks, shares, or equity, drop them in the comments below. Thanks for watching, and I'll see you in the next video.